mean, there's no doubt that Masa has broken a cardinal investment rule. He's concentrated too much in a couple of big investments. And here we have WeWork obviously not coming off. And, you know, it's in reality, you know, he started the funds in 2017, very keen to invest. He was kind of turning up to the frat party with a truckload of beer when everyone else had a six-pack in the VC market. And WeWork's the hangover, unfortunately. But actually, ultimately, the fact that it has been re-rated down, the fact that actually it hasn't IPO'd, is a good thing for the markets longer term. And it actually, ultimately, I think will be a good thing for his fund because he actually needs the IPO markets. It's how he's going to cash out. It's how he's going to realise investment gains over the course of the next 10, 12 years.
WeWork is a particular issue for the company because they've put in, what, $10 billion and own about a third of the company.
That's right.
So WeWork has to come out at about $25 billion for valuation in order for that investment not to be underwater.
Yeah.
Where do some of his investments like Uber? Uber shares are down, but what about SoftBank's investment in them? Are they up from what they had put in?
Yeah, versus Uber, it's a tricky one because there's obviously the late round as well. I think he's slightly ahead still. Slack, he's definitely ahead because he invested originally in 2017. A lot of these funds and the original money in WeWork is also 2017. So keep this in mind. So far, he's made, or the fund has made, $20 billion of investment gains. The WeWork write-down, probably 7, lose it. We've got mark-to-market of Uber and alike, that's another 4. So he's going to lose 11 probably this quarter. In mark-to-market effectively. But actually, he made 20. So he's still ahead. The fund is still ahead. And I think the market's certainly not focused on that or recognise that.
I mean, he was a huge winner for a long time, gains of 29% annualized over a number of years. What would you say about the strategy? Because he was the one who was funding all of these companies to go out. His mantra was to build big, try and get the first mover advantage on all of these issues. Has the table turned in terms of what the public markets will then accommodate? Absolutely. I think clearly WeWork is a really important signal to banks, to everybody that, you know, real companies, the only ones we want to see IPO'd, that investors have done the right thing and said, you know what, your corporate governance, your practice, the business model is questionable. So actually, I think it is a cleaning out of the process. I think so. What it means then ultimately, there's another, what is there, 70-odd companies that aren't listed within the Vision Fund. They're the ones going to become more interesting. And we should see, you know, he's talking about half a dozen this year, another 10 next year that will IPO. I think as time progresses, he'll prove that, in fact, some of the smaller investments are actually better moonshots.